back with another stock analysis, and today we'll be looking into Reddit. Now, Reddit has IPO'd just about a year ago now, and they are on one of the most insane stock runs I have ever seen. I actually almost got into the IPO through the Robinhood IPO access, and I missed it. I didn't get any shares, which sucks, but the company is still doing fantastic. So we are going to look through the financials, look through their chart, give a bit of a valuation and some other stuff. So if you're interested, make sure to subscribe and let's get into Reddit stock. So starting off with Reddit here, they are entertainment, social networking, social media kind of company. Founded a while ago, actually 20 years ago in 2005, but they just went public a couple months ago. And by that, I actually mean like a full year ago. But anyway, average revenue per user is at, looks like, apparently the estimate, oh, that's total, never mind. So looks like it has been rising every single quarter this year, which is awesome. Daily active users has also been exploding recently, actually. Since the beginning of the year, or since the first quarter, they have gone from 82 million to over 100 million. Also, average revenue per user in the US is at much, much higher than international, significantly higher, actually. So very interesting there. A very much majority of their revenue comes from the United States, which is kind of to be expected for the most part. But looking at some key statistics here, market cap is at 38 billion. So in my opinion, I think this company is overvalued. I'm just saying it like it is. This is their stock chart since they went public, basically only going up. They had an uptrend from August to October of last year where they essentially just went up almost every single day. They then had a 40% day, and since then it's just been explosive gains. So getting back into the actual company here, long-term growth rate is at 40%, which is insane. Target price is at 187, which is also insane. I think even that price could possibly be a little high right now. But we're at 222 right now. If we go down, we do have a growth summary, and it is aggressively positive, basically everywhere, other than one single section. But almost everything here is very positive. Sales growth at 52% over a 3-year CAGR is insane. So definitely a lot of potential and even just straight up upside here. Now, I do think that they need a bit of a retracement, if I'm being honest. I don't think they can really see this growth continuing for so long with their stock price, at least. I think their sales growth will continue, but their stock price growth needs a little bit of a nudge down at some point, and I'm fairly confident that'll happen probably this year in 2025. It kind of needs to. Like, I feel like this is too much too soon. They just went public. But you never know. They could just be insane company with crazy growth, and that's just how they're going to do it. So looking at their sales, you can see almost every single quarter since they've, I believe this is when they went public in June 2022, possibly, or what happened was they already had reports from earlier and facts that added that to this. Either way, huge sales growth, like insane sales growth. And looking into this, we can see operating income has been positive 2 times. One of those times was last quarter, which is awesome. It's looking like their next quarter as well will be a profitable one. And also, they are reporting their earnings in about 5 days, February 12th. So we will be looking into this again very soon. I'm just doing a preliminary look through everything just to see what's going on before this big earnings report comes out. Also, they had those 2 quarters of net profit as well, which is fairly good. One thing I will say is you can see their shares have been fairly significantly, not a crazy amount, but they have been getting diluted over the past 2 quarters. This is mostly a thing with going public as well, where they're also just diluting the shares a decent amount, but overall, nothing bad there. Now let's get into the balance sheet, see what's happening here. So their total assets have just gone over 2 billion. And this is one thing with the company. I know assets really don't have much of anything to do with the valuation, but they are at an almost $40 billion valuation with 2 billion in assets. That is crazy. Now, don't get me wrong, they clearly have the sales growth to back it up and the potential sales growth to even further back that up, but it's just crazy. Also, they are an online company, so they really won't have that many assets in the first place. So really not too big of a deal there. But anyway, debt situation is incredibly healthy. They have just about 1.7 billion in cash compared to about 27 million total in debt, which is amazing. The fact that they can achieve all of this growth without really using any debt is fantastic. So now moving into the cash flows, let's see what we have going on. So 3 quarters straight of positive operating cash flow. That's awesome. Also, they basically more than doubled their cash flow quarter over quarter, which is really good. We saw a ton of investments get purchased 2 quarters ago. Um, Other than that, they've kind of been a little mixed, a little bit of buying, a little bit of selling, but 500 million in investments sold about 2 quarters ago, which is a little interesting there. Also, we could see a little bit of that stock dilution over the past few quarters. They really sold a lot at the beginning of 2024, which again is perfectly fine considering their situation. All of that is no worries at all. And then last thing, their free cash flow has been consistently positive for 3 quarters now. After their first quarter, it looks like was a little bit rough, but overall 3 quarters of being positive is awesome. So everything looks fairly good there. I don't think we'll have any segment history. Oh, actually, we will. We don't have 2024 here yet, unfortunately, but I believe that fiscal year will be coming out next week, which is awesome. I'm very excited to see it. I'm sure the stock price, if it's good, this is going to be a $50 billion company, probably very easily too. It's crazy. So overall, we'll have to see. Looking at their ratios, we could see some pretty solid gross margin improvement. Also, their SGA to sales has been coming down for the past 2 quarters after a high of around 160, and now it's at 142. Net margin is getting closer to positivity as well, which, by the way, this is for the last 12 months from this quarter. So that is why we saw earlier the net margin was positive and now it is not on here. That's because it's taking into account the last 12 months. So we're seeing improvement quarter over quarter here, but because it takes into account the other 3 quarters as well, it still shows up as negative. Other than that, everything else looks fairly good. Again, we already went over their debt. Incredibly healthy situation for their debt, so no worries there at all. And now let's get into the earnings. So I already have some stuff up here. I have the analyst takeaways. I also have the operating metrics, which we'll get into right now. So looking at their metrics, revenue beat fairly significantly at about 40 million, just under 40 million. International revenue came in about in line. Gross margin came in slightly above. EBITDA margin came in significantly above, actually, about 8% above estimates. Daily active users beat estimates as well, including international, which is the place where they are suffering a little bit. So that is good that they're kind of beating in at least one part of their international segment. Average revenue per user came in way above estimates, which is awesome. US estimates really outperformed there, where they beat by almost a full dollar, and then international also beat as well, which is very good. Now looking at the analyst commentary, I'm not going to read through everything here, so feel free to pause and read through this if you are interested. But what I am, once I figure out the Zoom here, is really just the overview part. So this is the report where their shares were up 40% in one day, which is insane. Quarter 3 revenue was 10% higher than consensus, with EBITDA margin coming in 8.6% higher than consensus. Most of this we've read through. Analyst commentary was very positive. Most shared a positive outlook on sales and margins, while several highlighted strong future data licensing growth. Some concerned over valuation premium compared to peers. So that is something that I am also concerned with. And again, please pause here and read through the rest if you would like to. But one thing I'm going to go into now is their valuation. So they have a fairly crazy valuation right now, in my opinion, which we will get into in just a moment once this loads for me. So, of course, as it always happens with me, for whatever reason, the PE ratios are not showing up for me. So I think instead what we're going to do is I'm going to get this up on my own. One thing I will say though is that their competitors aren't that related to them. We have Snapchat, Roblox, and Pinterest showing up here, as well as Discord, which I believe is a private company, and Etsy, which isn't that related to them either. But either way, in 1 year, their PE ratio is expected to be 241, which is insane. Currently, I believe it's actually negative, which if we look here on what I would have used to value them, should they have had actual competitors that have their stuff put in here, their PE ratio is very negative right now. So does not work out too well. Let's try internet and data services and see if we get some better stuff to come up with. And if not, we're going to go with internet software. So here we go. Let's see what we want to go with. So again, these companies are more just internet companies, but even still, the valuations here are kind of crazy. And if we see the fiscal year 2 showing up here, 241 for Reddit is going to be crazy if they do achieve that, which again, that's an estimate for next year, basically. So if they can get that, they are going to be essentially 4 or 5 times more overvalued than the average company in their sector. So something to consider. But overall, let's take a look here. So 83.08 and 67.09. 83.08 and 67.09. So that gives an average of about 75. And now what I'm going to do is try to find something here that gives me some recent EPS. And I think we should be able to find. So what we're going to do is possibly do the 2025 estimate of 0.9. And if not, we could also do their quarter 4 of 2024, which should be 0.25. First thing I'm going to do is look at the income statement and see if the EPS of recent quarters is available. So their last EPS that showed up on a quarterly report was 0.17. So that is actually what I'm going to go with here, not the current one of negative 3.31. So let's go with this, giving a PE ratio of 1,305, which, I mean, that's what their EPS was. I don't know what to tell you, but that's what it was. So that gives a potential downside of 94.25% with a valuation of around $12 a share. Now, obviously, that is most likely not anywhere near where they should be, which is why I think I'm going to go with the quarter 4 estimate right here of 0.25, and let's see what that does for us. So improves it a little bit. Again, this is compared to their competitors, which aren't really that similar to them. So it's not the most accurate part, but again, this is comparing them to multiple other similar companies. So just something to think about. I do believe they are overvalued at the moment, and I think this just kind of strengthens that thought. So let me know what you think, of course. If you think they're overvalued, if you think they're going higher, let me know. And I think that's basically it for what I have for Reddit today. That's all I really wanted to go through. Again, huge earnings report coming up. This is going to be very, very interesting to see what happens. That 0.25 EPS, if that does happen, I think if they can beat significantly on their EPS, this is going to be huge, because anything higher than that 0.25 EPS, let's say they beat it by like 50% or something, or I don't even know, if they beat it by whatever and they get like 0.4, that just raises their valuation. Say they get 0.5, a little bit higher there. So any beat on EPS here, I think, is going to be massive, because this is one of the most common ways of valuing companies. So if they can beat on their EPS, I think that will be huge. I think that's something that a lot of people will be looking for. So I will be looking for that as well. So that's about it. Thanks for watching, and make sure to subscribe, and I'll see everybody in the next video.